the long-term bet, and I've been through these cycles before, I've ridden it down 85% before, and I'm still, well up on my investment. And, the idea is long-term, you add into the moments. See, what you've got right now is a really interesting juncture. You've got the terrible macro, which is liquidity is being withdrawn from the system at a record rate. So we can use, let's say, year-on-year rate of change of M2 or global M2. That's coming off. Bitcoin's highly correlated. All crypto assets are highly correlated, as everything is, because liquidity coming out of the system means the price of the denominator goes up and the value of assets goes down. So what you've got is that reverse effect going on right now.
Real Vision co-founder and CEO Raoul Pal had never hidden his admiration for Bitcoin and other crypto assets, which he believes present the best opportunity for wealth creation. In a new interview at the Wharton Crypto Conference 2022, Raoul Pal re-emphasized his belief that crypto is the best opportunity to create a generational wealth, especially with the recent low prices of Bitcoin, Ether, and other crypto assets. Raoul Pal leads Real Vision to provide unparalleled access to the very best insights and analysis from the brightest financial minds. He prides himself on being a business cycle economist, investment strategist, and economic historian. Before we listen to Raoul Pal, here is a quick market update. Bitcoin recovered to $21,000 on Friday after falling to around $20,000 on Thursday morning following the Fed's hike. Meanwhile, Ether bounced back above $1,640 after falling to $1,500 on Thursday. Polygon is 60% down from its all-time high of $2.92 and has already made quite an impressive recovery against other altcoins. Cardano recently completed its Alonzo hard fork, and Charles Hoskinson announced the Age of Voltaire, a digital event from November 18 to 19. Dogecoin price rose more than 55% to $0.1349. Despite its huge potential, Cardano has a growth cap due to its already inflated market cap. The payments giant Visa is one of many that have gathered in the crypto space. Last Thursday, Visa filed for trademarks for cryptocurrency wallet transaction software and virtual environment software, indicating a metaverse push. As we listen to Raoul Pal, please don't forget to smash the like button and subscribe to the channel if you are yet to do so. Thanks for watching our videos.
To be honest, I'm less bullish on Bitcoin versus others because I think others have larger network effects right now. But Bitcoin itself, I came up with the idea of this pristine collateral because we've talked about the collateral layer of leverage. So Bitcoin itself is recorded on the blockchain. So that makes it interesting collateral because you know who owns it. Secondly, you can't create more of it. So if you think about US treasuries, which are the collateral of the world, the Federal Reserve essentially can print more dollars or create more and more treasuries. So your collateral in a crisis, actually the yields fall and you're rewarded less in yield terms, although the price rises, for actually lending your collateral to the market. And I'm like, that doesn't really make sense because when things are in really short supply, you should be rewarded more in the yield because somebody wants it and they want to rent it from you. And I thought, well, maybe with Bitcoin, because it works differently because you can't create more of it, then if you need collateral, then you can use this collateral and you'll pay a higher yield for it in times of crisis. So collateral has a proper value and it can't be devalued. And as I said, the importance of the collateral is the fact that you know who is the eventual owner, and that's what blockchain does. So I thought, Bitcoin is an amazing collateral. The issue is right now, it's very volatile as a collateral. So if you put it into any risk model in a bank or a fund, you find that it doesn't give you much ability to take leverage because of collateral. Now, not taking excess leverage is actually probably a feature and not a bug, but that's part of the issue is it's probably not yet ready for pristine collateral status. But what happens is over time, anything that goes through Metcalfe's law, which is basically adoption effects, which is the number of users on the network and the number of interactions between those users and applications, let's say. As you start getting adoption, and they tend to go exponential in Metcalfe's law, then with that, you tend to lower volatility over time. Also, what you get is over time, the year-on-year rate of change of price goes down as well. And we've seen that in Bitcoin, and we've seen it in most of the adoption effect technologies, even the internet, had this same rate of growth that slows down over time. But what you find is the stability and the volatility of things that get adopted goes down. And the more the volatility goes down, the better it is as a collateral layer for the entire system. It was in 2020 when I realized that the outcome to every single economic action that was negative was going to be the printing of more money. And the printing of more money is kind of misunderstood. I think a lot of people think the inflation that we're seeing now is based on monetary printing. I don't believe it is. I believe it was fiscal stimulus plus restricted supply. The monetary printing didn't do that. What it does is it debases a currency. It's kind of a very kind of nasty way of doing things because people don't see it. Because what happens is asset prices go up. So everyone thinks they're getting rich, but in fact, all asset prices go up. So your house here goes up relative against other houses, goes relative against the S&P, goes relative against all things. So you actually don't go anywhere. And what we found is that earnings growth weren't going up at household level, real earnings. So people were actually getting poorer because of the debasement of currency. And that's how the debasement of currency works. And once I'd figured out this debasement of currency, which is quantitative easing, then I realized that with interest rates as they are and the structure of global debts and aging demographics, this trick is going to be rolled out in a number of different ways. You know, what we saw is a new way in 2020, which was fiscal stimulus financed by the central banks. I think we'll see much more of that over time. We'll see yield curve control. There's a number of ways this happens. So I then looked at all assets versus the central bank balance sheets and realized that there was only two assets that actually really outperformed. Most of actually things like gold actually didn't do very well. Real estate was pretty much in line. The S&P 500 was pretty much in line plus earnings. The NASDAQ did better because exponential technologies tend to outperform over time, and there's a lot of new technological disruption going on. But the one that really stood out was cryptocurrency over time. It really, even though it boom busts, over time, it massively outperformed because it has two things. One is this money element or the scarcity element that's digitally proven. And the second one is the network adoption effect. So those two things combined kind of hypercharge things in the monetary debasement environment. So then I started looking more into Metcalfe's law and trying to understand, okay, how does this apply to the digital asset space? And I was one of the first people to really start building models around this and realize, okay, this was everything. And this was the fastest adoption of any technology the world had ever seen. And it was being adopted about twice the speed of the internet. And I thought, okay, here is a long-term theme that I'm extremely interested in, that I think solves the issue of debasement of currency for me at a personal level and for my clients. And also was investing in a new technology that was showing exponential trend growth. So I just thought, well, this is the one big bet. And so not only did I put 100% of my liquid net worth into this,
100%.
but in it, yeah, 100%. Okay. And I'm still roughly there today. And then on top, I built two businesses based on this as well. One day, these are the long-term bet, and I've been through these cycles before. I've ridden it down 85% before, and I'm still, well up on my investments. And the idea is long-term. You add into the moments. See, what you've got right now is a really interesting juncture. You've got the terrible macro, which is liquidity is being withdrawn from the system at a record rate. So we can use, let's say, year-on-year rate of change of M2 or global M2. That's coming off. Bitcoin's highly correlated. All crypto assets are highly correlated, as everything is, because liquidity coming out of the system means the price of the denominator goes up and the value of assets goes down. So what you've got is that reverse effect going on right now. Money's being taken out of the system. It's more scarce, so assets go down. Fine. So we're in the macro cycle and we're waiting for the turn of the macro cycle when eventually the interest rate markets start changing their perspective and say enough's enough, let's go back to more liquidity. And that'll be the turn in the crypto markets, which I think is coming. But what it's doing, it drove the price back down to the bottom of the exponential trend. That trend keeps going. And you can just do a log channel, a regression channel on Bitcoin or ETH or whatever, and we're down to that just over 2 standard deviations oversold level. It's about as cheap as it ever gets. So what you've got is a fantastic entry point in a long-term secular trend and a really interesting entry point in a macro trend. And I'm not talking about today or tomorrow. I'm talking about over this period of time, whether the market goes, down another 30% or not. It's kind of irrelevant, because when you buy an exponential trend at the bottom, you tend to get these 10, 20, 30 X's to the upside. Now, it's probably not going to happen to Bitcoin, because, as I mentioned before, Bitcoin is further up the adoption curve. It's the oldest of the cryptocurrencies, and there's more owners of Bitcoin. Well, there's probably more holders of Bitcoin, more users of Ethereum. Ethereum network growth is generally faster. There's more network activity. It tends to outperform over time. And then we'll see newer tokens earlier in the crypto adoption cycle that will do particularly well. But this is a really interesting moment in time. It's like being given that gift back in 2014, or that gift that we got in 2019, and again in 2020 when we got that sharp correction in COVID. Those were the generational wealth-making opportunities in crypto, and anybody who participated at those points did extremely well over a long enough time horizon. And time horizon is crucial in this equation.
What do you make of Raoul Pal interview? So you agree that the current crypto market presents an opportunity to create a generational wealth for those who are currently buying crypto assets at these low prices? Here at Savvy Finance, we continue to invest in crypto assets using the dollar cost average strategy. Dollar cost averaging is the practice of investing a fixed dollar amount on a regular basis, regardless of the price of the crypto asset. It's a good way to develop a disciplined investing habit, be more efficient in how you invest, and potentially lower your stress level, as well as your costs. Thanks for watching. Please stay savvy till our next video.